Let's talk a little bit as we head into earnings season. This idea that stock buybacks are down to a 21-month low. In the fourth quarter, they were down by over 3% and definitely seem to be losing some steam. Do the companies know something we don't, Quincy?
No, I think that, basically they may be wanting just to hold on a little bit more cash watching the market themselves. But the fact is, before the earnings season, you're going to have a blackout period.
Which is what we're in right now.
Exactly. But nonetheless.
But I think this is a trend that's been coming for months.
Exactly. Yeah. And this just goes to the point that fundamentals really are going to matter. Whether or not you think Janet Yellen's going to be accommodative today or not accommodative, hawkish, dovish, the fact is we're moving closer to where we need growth, we need fundamentals, we need revenue growth to pick up, we need the bottom line to show that companies are doing well.
Do you think we'll see that? Because it has been a bit of an earnings dearth.
No, it's been very, very difficult. And I think this is another reason why we're fully valued right now. We're overbought. And the market is basically saying, we got to see what companies have to say. We're moving in that direction. And in terms of seasonality, we're going from probably the best period in the markets to, statistically, doesn't mean it always happens, but the worst period in the market. And you have normal caution in the market.
You just mean from stock perspective prices, not necessarily earnings.
Yeah, from a stock perspective. So again, it's a normal caution. And the point here is, what more, if negative interest rates is the next frontier in monetary policy, that's telling you that this market needs to have the fundamentals. We have to move in that direction and have winners and losers in the market as we go through earnings season.
Stephen, I know that you think stocks are fairly valued at these levels. We have come back pretty sharply.
Yeah.
But what happens if Janet Yellen has a hawkish message today? How does that change?
Why are we so scared of 25 basis points? Aren't we like a year overdue on this?
But the market has had this massive reaction, in part because of the dollar sensitivity.
I completely understand that, but we're virtually still at zero. Let's move a little bit. We'll be okay. There'll be some bumps along the way. That's fine. And I understand the rest of the world's going the other direction with negative rates and 500-year lows on that, which is dumb. And they got to get past it. But we can raise our rates a little bit, and our economy is going to be just fine. The stock market might drop a couple points right off the bat, but it'll show that, hey, listen, guys, we're nearing full employment. Let's go. Let's get moving on this.
And usually that's very good news for the stock market if the economy is strong enough to take all of this in. But it does come to that question of earnings right now. If the dollar strengthens
it's never
again,
perfect.
So
it's
you
never
see
going to be
a period of dislocation between?
It's never, ever going to be like the magic day that we can raise rates 5 points and get back to the norm. You know, let's move a little bit now. I know it's not the perfect day for it, but let's move a little now. Let's move a little bit more later this year. It's not going to happen, you know, because of all the fears and because of, you know, earnings season isn't perfect right now. And I know the buybacks aren't happening to the same extent too, but listen, they've been doing that to an extreme for 5 years now. How long do you expect them to continue to do that?
I mean, those are all arguments for why the Fed should have raised rates.
They should have.
At least a year ago.
At least a year ago. And I get why they didn't late summer, but they missed their window in the spring, summer, beginning of summer last year. And now we're paying the price a little bit for that.
What would you tell equity investors in terms of U.S. equities at this point? Would you tell them to go ahead and invest cautiously or wait and ride this out?
This is the calm before the storm. We've got the Fed fight every Fed person out there is coming out giving a different story. They got to get their story straight. And then we got the political world, what's about to happen. We would have never assumed a year ago that we were going to have the extreme views that we have going out there and the complete unknowns. Let's be honest. No one knows exactly what's going to come out of Trump's mouth anytime soon.
You sound like you're telling people to wait and kind of ride some of this out before they invest.
If it comes down to Trump and Sanders, I'm going to cash. I'm being honest with you, because it's going to be that extreme of the volatility you're going to see in the markets. In the meantime, it's probably not going to happen to that, though. In the meantime, no, I'm still investing. I'm finding my pieces. I'm buying the energy every time it dips down below where it should be again. I'm a little worried about banks right now. I think there's a lot of banks out there that have been propping up some of these lower-end energy companies that we could have some issues with. But technology, absolutely wonderful technology companies out there. So finding our pieces, getting across the board, short end of the yield curve, yeah, absolutely.